back to The Lens with Larry McDonald and Robert, the Doctor Van Battenborg. This time we're joined by our longtime friend and contributor, Chris. Chris Davis is the founding partner at Hudson Value Partners. He's a specialized in value investing, focusing on company fundamentals and long-term total return strategies. Today, we'll be discussing growth to value, the Fed, the SpaceX IPO, among other topics. So, guys, the stage is completely yours.
Excellent job, Valentina. Special thanks to the entire team in New York for putting this together. Hey, Chris, it's good to see you. Dr. Van Battenberg's in the house. Good to have you back, buddy.
Thank
Really
you.
excited. Let's kick it off, Chris. So what we try to do in our institutional chat behind us, we've got hedge funds, mutual funds, pension funds. You've been in there for several years now, and I appreciate all your contributions. So we have this kind. It's kind of like it's like a live ideas dinner. And so you can see the birth of narratives in not just in Twitter and X, but in the conversation behind me. You can see it in sell side research. And one narrative that I've been hearing the last month or so is people looking at either Tesla or some of the Mag 7 and trying to figure out what is their stake in SpaceX. How big is this IPO going to be later in the year, and who's really has the most potential upside from that IPO. Tell me some of your work, and what are you looking at with SpaceX now?
Yeah. Well, first off, thank you very much for having me. Always good to be with you guys. SpaceX, I mean, it is a massive private company. You're looking at a $1.5 trillion valuation, and it's probably the private company in venture land that's been private the longest. 2002 is when it was started.
So 2002.
Yeah. So
And
you're
so
looking at
when you
24
say
years.
1.5 trillion valuation, and how much capital would they potentially raise on the IPO?
Yeah, the talk is that they might raise about 50 billion, which would be bigger than even Saudi Aramco raised by about $20 billion. So massive deal in the offering.
And that Saudi Aramco is the biggest IPO ever, right?
Yep, so far.
So you're talking about how much bigger than Saudi Aramco? So you're talking about breaking a big, very big record, right?
Yeah, you're talking about trying to bring in maybe another $20 billion in cash than Aramco did. And if they graft on that XAI like they're talking about, could be a $1.7 trillion valuation even.
Now think about this, Chris. One question that we're going to get from clients, and people are already talking about this behind the scenes with me in the institutional chat, is when you have an IPO that big, right? Portfolio managers in, say, the technology space, they have to make room for that new capital, right? They might have to sell other stocks because they're going to have such a big allocation, and so it's like a snake swallowing a Volkswagen, right?
Yeah, no, you're going to have to. The cash is going to have to come from somewhere, and 50 billion's a big nut to come from. And I think what invariably happens is people you trim your winners, you trim your biggest positions to fund it, and that it'll punch its way up into the top 10 stocks in the U.S. pretty darn quickly.
And Robert, you hosted an institutional call, I think it was last week, with fund managers. Well, what was the conversation of? What was the line of question? Some of the ideas. I know there was lots of comments about Dish and their stake.
Yeah, well, I mean, people are looking for ways to essentially play SpaceX before it becomes public, because we know what Wall Street is going to do, right? They're going to try to ramp this up. They're probably going to try to ramp up the whole market in order to make this as successful as possible. If this is the largest IPO in history, then they definitely want to have a successful IPO. They want to get a good evaluation on it. They don't want it to go down on the first day, and it's those kind of factors that go into play. So that being the case, then people are looking at, okay, how do we play SpaceX now? Which vehicles, which stocks now have an actual economic interest in SpaceX as a private company? And so Chris and I were looking at stocks like, they're actually ETFs, the ARK Venture Fund. ARKVX is a symbol. They have a sizable stake. I mean, together with OpenAI and XAI, the 25% of their market value is determined by these stocks alone. And then they have a smorgasbord of publicly traded companies, right? Like the usual suspects, the NVIDIAs of this world. But the quarter of the portfolio is now SpaceX, XAI, which actually may combine, and OpenAI, believe it or not. Other ones, Ron Barron's fund. I think Chris mentioned that.
Yeah, Chris, get into that. What's your discovery on Ron Barron's fund?
Yeah, so Ron Barron, who's been a great investor and compounder over time, he's always been also a big booster of Tesla and Elon Musk. He's got this new ETF that launched within the past couple months. He's now got it up to, I think it's 15% of the portfolio in SpaceX, 3.8% of the portfolio in XAI, and that's in this Ron B ETF, which it's pretty incredible. The private markets and public markets are really converging now that you have these massive private companies within ETFs that anyone can go out and buy just like you would buy any other stock.
And how do they get a hold of those shares? Because they're private shares, but they put them into a public ETF.
Yeah, I assume that they bought them on the secondary market. I mean, the number of owners that have SpaceX out there, because like we said, it's been around since 2002. This thing is like keeping venture capital funds from the Bush administration era going alive, and people just need that liquidity. I mean, this is the other big part of the story with venture and the IPOs this year is there's been such a backlog that this would really be just the gusher in the floodgates when SpaceX ultimately comes public.
Right, and then Rob, on the Dish side, well, how are people playing Dish?
Well, SATS is the symbol, and it has an enterprise value of $61 billion right now. As much as 68% of its value is now OpenAI. Oh, sorry, it's SpaceX, because what happened was somewhere in the third quarter of last year, EchoStar, which is essentially, kind of like very stable, gradually declining business,
Blockbuster Video.
Yeah, maybe not as much. I mean, they still have valuable assets, which is the spectrum that they own. And so they did a swap. So they sold spectrum to SpaceX in exchange for stock. So now they own about 53 million shares of SpaceX. So it's been a tremendous vehicle for essentially for equity market, secondary market, public market participants to actually play SpaceX without being actually able to buy the shares of SpaceX yet. I do have to mention that yesterday there was a story that XAI and SpaceX, Elon Musk was contemplating a merger between the two. So it would be dilutive for companies like EchoStar. So as a result, EchoStar stock sold off in reaction to that. So the value proposition now has become a little bit more attractive because it's not as elevated anymore, because it did appreciate significantly since they did the deal, because people were piling into the stock in order to play the SpaceX IPO. Now with the pullback, now it becomes time to start looking at it again.
Right, and Chris, we've seen this before. It's amazing how distressed equities, right, or equities that are under some type of stress. We've seen this many times. Calpine, Yahoo. I think you mentioned to me before Yahoo had this stake in Baba. Remember? So walk us through memory lane in terms of this is the history of these types of transactions.
Yeah, oftentimes it can be this one speculative asset or just this Easter egg within a company, a hidden asset that keeps it afloat. Yahoo had a stake in what they called Altaba, which was basically an SPV with Alibaba in it. Now, Yahoo was bought and sold by Verizon and AOL, and has ended up in Apollo, owns it somewhere, and just some private equity fund that's on a fast road to nowhere. But you think about it really gave a new lease on life to the EchoStar. And I think one of the things, your signature phrase, how to listen when markets speak. as this deal is being marketed and the road shows are going on, the market is going to be speaking through things like SATs, through things like the ARK Ventures Fund, the Barron Principles, First Principles ETF, because people are going to be using these in real time to express, their sentiment on the deal.
Right. Rob, are we hearing any other large stakes from hyperscalers or Mag 7 or obviously Tesla?
Yeah, well, Tesla is becoming a backdoor vehicle into SpaceX, right? Because they did a deal like earlier this month whereby Tesla bought $2 billion worth of XAI. And if XAI merges with SpaceX, then, Tesla indirectly becomes a shareholder in SpaceX. Now, there's also been rumors that, long-term shareholders of Tesla could actually get preferred access to SpaceX IPO, in the primary market. That's been a speculation. Elon Musk didn't talk about it in the conference call when he had the conference, on the back of the earnings earlier this week. Maybe he'll talk about it sometime in May or April when they come up with their first quarter earnings. But yeah, as Tesla could be seen as a vehicle. Now, there was a new chapter in this whole story, which is that Elon Musk suggested last night that Tesla and SpaceX and XAI could actually merge, and that then becomes a $3 trillion behemoth, right? $1.8 trillion for Tesla, $1.5 trillion for SpaceX, and $300 billion for XAI. So we don't know when the chips are going to fall, but obviously, listen, when the markets speak, Tesla was down yesterday. Now it's up, bucking the trend of a largely down market. So there's definitely people that are playing SpaceX right now in Tesla.
And Robert, as a value guy, I always love to fish around in the world of John Malone. And it really reminds me that if Elon Musk puts all these things together, it could have this sort of a Liberty Media dynamic where in the future you come out with these tracking stocks, or you might start spinning them off, or having all sorts of opportunities for financial engineering and some corporate finance around, because these are companies, while they don't necessarily have a lot of debt like the John Malone companies, a lot of them have a huge free cash flow burn, aren't necessarily cash flow generative. So there's going to have to be a lot of very interesting financing in order to keep the machine going.
Right.
And Chris, one of the things we talk about in our book, How to Listen to Market Speak, is the transition from what we call financial assets, really paper certificate stocks, obviously treasuries or global duration bonds like France, Japan, over toward hard assets. And then there's a big chapter in the book on the move from potentially coming down the road from growth to value. And I find it interesting that Mag 7's wobbling since October, really unchanged to down. There's a big move from growth to value. It's so far, it looks a lot like the 2022 move. And in 22, we had an inflation revival, and we had global bond yields that were higher. And we talk about that discounted cash flow model where there's a big move potentially into global value equities. We talked about this in December. It's following through now. We did a number of reports on it. What's your take on this move into value compared to 22? How sustainable do you think it is?
So my on the move is it feels strong. I mean, since that peak in October, we've had a little bit of real value outperformance. November took a breather in December. This month has been fantastic for people from the value lens, and I think really the big difference is this broadening of the trade, that it's people are looking beyond the mega cap stocks to just regular large cap stocks to small cap to mid cap, and where we are in this economic cycle with Besson talking about running it hot, you want to own those more cyclical companies, and that's going to be the industrials, potentially some healthcare, the hard asset type companies, select places within, say, like the IAI, the broker dealers and exchanges, the types of companies that are going to be leading the IPOs like SpaceX out there. So within that cyclical part, which is a big part of your global value indices, energy is a part of that. Countries in LATAM like Brazil, a great part of that global value trade. They're all strong. And when we look going forward, we still see a lot of support for that. So it could have a lot more legs than the 2022, almost value head fake that we saw.
Right. And you have stocks like Microsoft that are essentially almost unchanged for 2 years. 2 years. I mean, this was the most popular stock, and it was the number one stock in the S&P 500. It's shocking that the S&P 500 is still near the highs with Microsoft, really beaten down. Not a bear market per se, but just getting destroyed by hard assets here.
Yeah, I mean, it just when you look at stats like that and think of even just the move yesterday where Microsoft and Meta basically net each other out on the index level, shows you
Yeah.
just how hard some of those other great companies under the radar. They're pedaling hard to keep the index moving, and we've owned a bunch of those and some things outside the top 10, and they're doing their work.
So, Rob, on Micron, one thing we're hearing on Micron, and this is a good picture. Thanks, Jose. This is Microsoft versus the S&P, and that's fascinating. There, you can see Microsoft now starting to dramatically underperform the S&P for quite a long time now. Rob, you've done a lot of work on Micron. In our trade alerts, we were buyers of Micron in it last April. A high conviction capitulation model buy. The street was downgrading Micron and SanDisk every single day. The street was so bared up on Micron about a year ago, especially over 18 months ago. And now, everyone loves Micron because of their pricing power. Micron 150% above its 200-day moving average. For the love of God, this is like a monster re-rating. Rob, you put a buy on Micron last April. Thank you. We sold the shares a little too early in the trade alerts. But tell me about the thesis that we're starting to hear. Chris, I want to hear your opinion after this. The thesis is memory prices have gone up so much that it's going to hit margins at Microsoft and at the hyperscalers and Meta. And then that slowdown in growth potentially, because it's the old saying in commodities, DRAM is a commodity, right? So when commodity prices double, triple, those prices kill demand, and that kills the commodity cycle, right? I mean, this is something we've seen over and over across the commodity space. So if memory prices go up 200%, what does that do to Capex when the Capex budgets were already crazy? So now companies have to spend more money. Does that slow down growth potentially? And eventually that hits Avago. And if you look at the underperformance of Avago relative to Micron, it's shocking. And eventually it hits companies like NVIDIA. Rob, what's your take?
Well, I mean, when you have a movement like this that we probably have never seen before, where there's so much money spent in nominal terms on AI investments in data centers, you will have bottlenecks. Last year, it was primarily CoWoS, which is called chips on wafer on substrate, which is primarily controlled by Taiwan Semiconductor, which is
What's it
essentially
called? What's it
packing
called,
the
Rob?
memory on a chip
What's it called?
together with GPU in order to make it more efficient. That linchpin.
Rob, what's it called? I didn't hear the name of it.
CoWoS, CoWoS. That bottleneck is still there. But with the coming of age of next generation GPUs such as the Blackwell and now the Vera Rubin next year, or in the second half of this year, high bandwidth memory, which is what Micron makes, what Hynix makes, and Samsung makes, is also becoming a bottleneck. Now they're going to raise their production on that maybe by 70% this year, and Samsung is working hard to get approved by NVIDIA to essentially become a supplier as well, because it was a duopoly last year. So there'll be a lot of supply coming. But just as we saw with GPUs, and just as we saw with Taiwan Semiconductor and their chip on substrate, it is not enough, because there's such an enormous amount of demand. The reason why Microsoft is underperforming, the reason why the Azure growth was disappointing was because they can't get their hand on the equipment. And what these guys did was the equipment that they had, they first prioritized on Copilot instead of Azure. And this is what the market is punishing now. So you see that capital going from software to semiconductors. We showed this chart earlier in the week. The amount of money that went into semiconductors and went out of software is truly astronomical, because they realized that semiconductors is becoming the axe on the data centers. And whether that money goes into Micron, which is a DRAM maker, or SanDisk, which makes NAND, which is also a play on memory in the data centers, or even more esoteric ways to play this. This is the every single step of the way to get that data center up and running, and whether it's power demand or power equipment, you see that there is demand is vastly outstripping supply. So it's a beautiful setup if you're a supplier of, say, GE Vernova generators, right? Because they're sold out until 2030. If you're a memory maker, yes, the Capex will come online eventually, and the bust will be there. But Micron, they're building a plant right now in New York State, and it will come online in 2030. This is an incredible runway that they have.
Well,
Now,
yeah,
it's not the only
but
plant
true,
to come
true,
online.
but what the bears will tell you, and we do these what we call cage matches, and Chris has been kind of part of that, where we put a bull and a bear in a room. The bears will say that if there's any type of demand slowdown, that once they've committed to that facility, the market's going to price in too much supply and excess DRAM way in advance of 2030, Rob. Like it'll price it in years in advance, right? So,
I mean,
but
look, Samsung is bringing supply on the market, and maybe that will cool price. Or no, Hynix is coming in the second quarter of this year, so I want to see a price reaction there. But we just saw that both Microsoft and especially Meta, they raised their Capex by 66%, right? I mean, Meta basically gave a guidance of $135 billion of Capex for 2026, so they got money enough.
right.
But with these kind of stocks, yes, any kind of supply rebalance. If Hynix comes in with additional supply in the second quarter that they're ramping up right now, and we see a price response, we can see a dramatic sell-off in Micron. And you guess what? This will bring money back into the Microsofts and into the NVIDIAs of this world, because it is the memory part has become essentially the cap, the brake on for other tech companies to attract this money, because it's all going into memory right now.
Right. And so one of the clients brought up a point. ExxonMobil has bought back $70 billion worth of stock since 2022. My God, they've reduced debt by almost $6 billion. And they're just a freak, I think, massive free cash flow machine. Chris, in terms of, Rob didn't really answer the question. I'm going to ask you, if memory prices triple or double, and the Capex budgets were planned out like months ago, so all of a sudden your Capex was supposed to go up by 30%, and now all of a sudden it has to go up by like think of the DRAM cost to the hyperscalers, and then isn't that a potential growth shock? Because at some point those high prices create so much Capex and really draw cash out of hyperscalers in terms of their over investing. At what point is the DRAM increase a threat to slower growth?
I mean, if you're sitting in the CFO seat at Microsoft or Meta, you've got two choices. You can blow out your Capex budget to stay on target, to stay on schedule for the deliveries that the street and people are expecting. Or if you stay within the budget, you're going to have to slow down your build out, and that's going to slow your earnings growth. So neither one of those is necessarily a great outcome. I think, as Rob was mentioning, Micron's, bounty is a lead balloon for Microsoft. And that dynamic, those two are going to play off each other. I just tend to think, and this is something I had a little beaten into me by one of my mentors, is that, like you guys say, semiconductors are a commodity industry. There are some specialized commodities like an NVIDIA chip but in the long run, they are very prone to boom and bust, just like anything else. And I know you love some market history. So one of my best mentors was someone who was trained by Roger Murray at Columbia Business School, who was the same guy who taught Lee Cooperman, Mario Gabelli, and Henry Kravis. And he started off as a specialty chemical analyst because that was the hot, sexy growth industry of the 60s,
That
right?
was the hot one, right?
That was the hot
Plastics,
one, you know.
plastics,
Plastics.
plastics.
It's the future, exactly. And just remember, all those guys who were specialty chemical analysts were the first semiconductor analysts because the supply and demand dynamics and the industry dynamics are just very, very similar. So you've got like capitulation type buys on things like Lyondell, and you look at all some of these ethylene companies that are on the floor. That's just the yin and the yang of the cycle, and eventually semis will be back there. It wasn't that long ago that they were in a similar place. Some cycles are just longer than others.
And here we have the NASDAQ 100 is pretty much almost since October now. And so once again, this is that rotation we're talking about from growth to value or from financial assets, paper certificates over to hard assets, a big kind of transition going on within the multi caps. Next one, Jose. Chris, anything on your mind in terms of what you're looking at in the market? So you've been in the chat all week. Anything stand out or any other, I know you've got some high conviction views on natural gas, equities, and things like that.
Yeah, we've been buyers of ONEOK, OKE, which is a natural gas pipeline company. And whenever we look at commodity type businesses, we're always looking for companies that have some hard catalyst to them, not just trying to bet on prices or volumes. And they've rolled up 3 different pipeline businesses over the past few years. And if you think about, just pull up a chart on the side on your own if you're viewing this of ONEOK over the past year. Very hard stock for people to own. If you're a specialist at a pod shop, you probably got stopped out of it. And what really it looks like is that ONEOK, this could be the year in which they really are able to get that merger integration going. You're going to have free cash flow step up and a little bit of a step change there. And in the past year, it's really been that capital allocation trifecta. They've raised the dividend, they're buying back stock, and they've paid down debt, which are all things you want to see as an equity holder. In the meantime, you're getting a bit over a 5.25% dividend at a reasonable valuation. And whether there's a boom and bust in semis, whether there's a boom and bust in AI, I think those trends go on for a long time. And the fact is, in the U.S., you're going to need more power, more energy, which is a great theme of your work, Larry. And a lot of that's still going to come from natural gas. You're going to need an energy policy that's all of the above. So having some exposure to the pipeline names, we think is a great way to do it because you're really betting more on volume and flow than on price. And one nice thing about ONEOK for U.S. viewers is it's a C Corp, so you don't have to deal with the K1, so it's a little bit of an easier asset to hold.
So one thesis that I'm hearing, by the way, break evens, Rob, pretty incredible move here in break evens. And once again, $1.5 trillion of AI Capex and a fiscal deficit, although it's come down almost 6% of GDP. And Atlanta Fed GDP is over 5%.
Running
And
hot.
they want to cut rates, and the Fed balance sheet's up a couple $100 billion off December levels, right? So they're doing some stealth QE in there. As you can see there, big spike in running it hot. Those are inflation expectations. Rob, on the gas, Rob, we were on a call with an institutional investor who talked about all this trapped gas in parts of Texas and Canada. I love the old Western Canada sour story, where it's parts of Canada where a barrel of oil traded less than a case of Molson, a beer. So when you have trapped commodities that don't have a pipeline or don't have any access to the ocean or ways to get it around the world, the thesis that I keep hearing, Chris and Rob, is that there's this gas in many parts of the United States and Canada where you can bring and not just an SMR, because that's going to take a long time, small modular reactors, it's going to take years. But you can actually build a small gas plant near the gas and then have the data center there. So that not in my backyard thesis NIMBY, which is another threat to the AI boom. It's 820 data centers over the next 5 years. That's the expectation. Maybe 50 to 100 of those have NIMBY risk, not in my backyard. And then all of a sudden, there's a relocation of the investment to another part of the country where there's natural gas and where you can actually use that trap gas. Rob, and then Chris, what's your take there?
Well, that's why SpaceX is so exciting, because Musk wants to put those data centers in space and let them run on solar. Uh,
Right.
I don't know how long that will take, but you don't have anybody complaining about there, although I'm sure somebody will. So yeah, with respects to data center proliferation, I mean, there's a lot of plans. You see that in the states where there's a loose regulation and easy access to energy, like Louisiana, for example, the cheap energy, loose regulation. Western Texas is a phenomenal place to build to build data centers, because Western Texas gas is ample, and sometimes it even trades negative. So yeah, there's a lot of space. There's a lot of places in the U.S. to build data centers. The problem is that you got your data in the data center in Western Texas where nobody lives, and then you got to send it to New York, or you got to send it to Los Angeles. So that's why optics has been such a tremendous trade, right? You see,
Yeah, explain that for people. So fiber optics, Corning, so
GLW.
to trend. Go ahead.
Yeah,
yes,
Corning, GLW.
yes. So that, but you have companies like Light, LITE, that you're essentially a part of that chain to convert electrons into photonics in order to send it from the data center to the population center, or within the data center to send it at lightning speed, and it doesn't heat up the the cables, because data centers are such a problem with cooling down their data centers, right? That's why some of these data centers are now liquid cooled. But if you convert a lot of that to optronics, then you can send those data within the data center and outside of the data center. You can send it through photons, and then it reduces the heat within the data center. So that's a great opportunity. And especially if some of these, Rust Belt states, let's call it that way, are giving such a hard time for data centers to be built, more and more will be built in states that have a low population, have abundance of access to energy. And so the optoelectronics trade is one of the hottest trades in the market right now.
And Chris, One Oak has free cash flow of almost 4 billion, right? And a market cap of close to 50. Are you looking at One Oak for their gas assets, or what do you like about some of the gas plays?
Well, what we like about the gas plays is, it's a way you can, keep the value of your portfolio down on a PE basis. It brings some cash flow into the portfolio, and it's the hard asset. It's the pipeline. It's these hard to replace assets with, a very in-demand commodity that they have. And I think that point you brought up about the small turbines being built in data centers where gas might be trapped, that's just a great example of the power of your research and the Bear Traps report, because that's something I hadn't seen anywhere else. And with all your different correspondence and mosaic points in the chat out there, that's a viewpoint that you're getting from someone who's on the ground and has experience in West Texas or in Canada. That's not a New York view. That's not a front page of the Wall Street Journal view. So that's just one of the things that you were putting out this week that to me just makes all the sense in the world.
Yeah, a lot of people are starting to look at Canadian natural gas assets because, I mean, if Alberta ever breaks away, now remember, Alberta might never break away, but if the probability of Alberta breaking away in Canada goes from like 5% to 50% and then back to 5%, there's a huge trade there. You know what I mean? Huge. So you want to look at companies in the natural gas space up in Canada, or look at companies like Tourmaline. Here we have PPI. A lot of clients have been saying that PPI is going to move a lot higher because of this move in BCOM. But Rob, as you point out, BCOM is essentially 30% oil, gold, silver, and natural gas.
Right. Yeah. Well, I do think that the appointment of Warsh is basically a shot across the bow by the Trump administration. That there's a limit to how much they want to depreciate the dollar, how much they want to protect the credibility of the dollar as a currency, as the reserve currency of the world. So that's why we're seeing this big sell-off in precious metals right now taking place, because a lot of market participants were anticipating Rick Reeder to become the Fed chair, or maybe Waller, those guys that want to run the monetary policy hot. And people were thinking, okay, we're going to get like more balance sheet expansion and drastic cuts in interest rates. But Trump decided ultimately with Warsh, which doesn't necessarily mean they won't cut rates, but it's definitely a sign that in the end of the day, Trump does want to protect the independence of the Fed. And by doing that, at least he puts somewhat of a floor on the dollar, which we've seen earlier in the week. He was basically throwing it under the rug again, or throwing it under the bus.
Hey, Rob, think about these macro accounts, right? Think of what he's done to them this week. Once he mentioned the dollar that he's not concerned about, the dollar got slammed because you remember the old saying from J.P. Morgan, beware of the banker who claims he's not in need of your capital, because the very utterance of those words means he desperately is, right? So
Right.
If Trump claims he's not concerned about the dollar, that means he is, right? And so the dollar, and then all of a sudden you get the Warsh appointment, which is hawkish. So it goes from massively dovish to massively hawkish, right? Isn't that essentially what happened?
Yeah, I wouldn't call Warsh a real hawk, but within the
Yep.
group of top candidates, he's definitely the
Right.
most independent one. And he's had an almost unhealthy obsession with the Fed balance sheet, although I don't think he can reduce the Fed balance sheet. We have an ample reserve environment right there. This is probably the floor for the Fed balance sheet, but it definitely shows that Trump, decides to safeguard the independence of the Fed, which should put a floor under the dollar. And what's more important is essentially diminishes the risk of a buyer strike on essential U.S. assets like treasuries or stocks, for that matter, or the bond vigilantes taking over, and the U.S. monetary authority or the fiscal losing control over the long end of the yield curve, which also leads me to believe that there's a higher likelihood for a Besson next week to reduce coupon sizes in the quarterly refunding announcement, which is taking place on Wednesday. On Monday, we're going to get how much money.
Hold on, that's important, Rob. That's important. Explain why that's so. All right, if they're concerned about the housing market, obviously housing affordability is a joke. It's a national travesty. If they go out and claim that they're going to issue less on the long end, is that another move by Bessent and his bag of tricks to try to control the long end?
Yes.
Long end bond yields, and mortgage.
Mortgage rates are linked to the benchmark treasury, that 10 or the 30-year. And for him to anchor that long end or diminish or dampen the volatility could do a lot. But bringing mortgage rates are still at 6.1% or something, right? Even though the 10-year is just locked in at like 4.1, and there's still almost 200 basis point spread. That never happened. If you go back to the housing boom in the early 2000s, that spread was 100 points or less than that. So they want to bring that volatility in the rates market down. They want to bring these yields down, and they want to bring mortgage rates down. So yes, by appointing Warsh, they are doing a great job, or at least that's an attempt to diminish rate volatility and try to bring long bond yields down. Another way to do it is by reducing coupon sizes and pushing more towards the front. And they can do that now because the Fed is buying, again, T-bills. So they can push more to the front, and they've already raised T-bill auctions by about 50 billion in the last couple of weeks, reduce the coupon sizes, and thereby sort of diminishing the volatility, and at least trying to. It's a big part of Trump's housing plan, which it comes out in the next couple of weeks.
Right. Thank you, Rob. And Rob, your Washington pressure points. We created this new product. info@thebeartrapsreport.com if you want to get on Washington pressure points. It's really valuable because in April, we had many institutional investors that were shocked by the Trump Rose Garden move. And, not just that, on Greenland and everything over the last couple of years, property confiscation of Russian assets. And so international investors want a weekly look at the lens between, at the cross section of Washington and markets. And you really bring it all together with bond issuance, the TGA, all the complicated stuff for bond and people that care about the bond market. Chris, gold and silver, what is that, like a $37 trillion asset? Monday,
Yep.
maybe probably 40 trillion like on Monday of this week. Gold's off 12% now, silver's off 20. So you have a $40 trillion asset with a short-term bearish candle that is absolutely enormous. So you're talking about a $10 trillion hit. That's what I think this is supporting equity vol right now, because the counterparty risk out there, somebody got really hurt. Somebody got run over, both potentially on the short side and the long side, when you have that kind of move.
Yeah, no, there's definite whipsaw movement. It's a big market, but it's still a lot smaller than any of the other even single companies that we were talking about earlier. I think you guys have been great in showing some charts on it and different things like that. But you can still have a gold and silver bull market even if these commodities correct 20-30%. It's a long way to go before you get to the 50-day, let alone the 200.
The 50-day on silver is still, one of the guys said in the chat, still light years away from the 50-day moving average. Rob, special thanks to you and the team. We did trade alert sales. We sold our GDX in the trade alerts. It got to thousands of subscribers. We sold our SLV all in the last couple of weeks, the last week or so, last week. And we sold a lot of Rio Tinto. We've taken down the hard asset basket, been lightening up on uranium. The uranium story still sounds incredible for the next couple of years, but the rate of change and the kind of the speculation that really came in, and the broadening out of this trade across metals over to uranium finally. Uranium finally caught up this last couple months or so. Chris, are you doing anything, Chris, in the uranium space? There's not enough value for you there.
Yeah, well, I think that chart tells you that commodities and miners are always a trade, right? There'll be an opportunity to reload in the future. For us, nuclear is one of the hottest areas of the market, and we wanted to be involved in it, but do so in a value-oriented way. We own this company, Amentum, that's ticker AMTM. And what they do is it's a mix of government contracting, some defense business, but they also operate nuclear power plants. And that's just a great business. They do some work with the Navy. They do some work not only operating those plants in the US, but in the UK. And just this week, they picked up another $750 million contract to operate more of those plants. And that's just a perfect example of the type of small cap value company, originally was a spinoff, that is getting some love in today's market in this rotation from growth to value, where people are actually starting to put pen to paper and do things again, and realize that you can buy a company with great growth prospects that is on trend with these big trends of nuclear defense at less than a market multiple. And that's just one of those formulas that it's a sleep at well at night kind of place to be.
Right. Well, guys, thank you. And special thanks to our team. We've been in the uranium trade very publicly since 2020, 21, bought Cameco and the teens and URNM and NUKZ, all huge parts of our book. We had a whole chapter. When Rob and I were putting the book together, the publisher came into us and they said, guys, do you really want to do a whole chapter on gold, copper, silver, and uranium? I mean, we were writing the book in 2020, 21 into 22, I think, 21, 22. And we were getting a hard time from the publisher. And I really thank you so much to Penguin for sticking by us. Took the team a lot of courage to write a book about hard assets in 2021, 22. But thank you, Chris, for everything. We'll see you next week, and appreciate the insights. And it's at HVP_research to stay in touch with you on Twitter.
Awesome. Yeah, give us a follow, and be sure to follow Larry and Rob too.
Yeah, at HVP_research. Valentina, take it away. Thanks, Rob.
Thanks, Rob. Thank you, Chris. Thank you, Larry, again. As Larry mentioned, you can get your copy of How to Listen When Markets Speak. We are currently on the top 10 on Amazon, so get yours now. The holidays went by, but still, it's always a great gift for clients, for friends, for a family member, for your college student, everything here. So, as the team mentioned, we have a Bloomberg Live chat with more than 600 investors all around the world, and we would love for you to be a part of it. If you're interested in joining us, please email info@thebirdshopsreport.com. Also, as Larry mentioned, Rob and the team created this amazing report called the Washington Pressure Points, where we give you the lens on what's going on the Hill. If you're also interested in that, do not hesitate to reach out to us. When you on board, thank you so much. And